Welcome to today's panel on the drive to progressive modernization and how leading financial institutions are reinventing product and pricing experience. I'm Jim Raposa, Research Director at Aberdeen, and joining me today are Karim Somji, founder and CEO of Zafin, and Likhit Wagle, General Manager of Global Banking at IBM. Having flexible and engaging customer experience has always been vital for leading financial institutions. But with the impact of COVID-19 and shutdowns and this move to pretty much primarily remote interactions, being able to offer your customers the best products, the most flexible pricing, and really those experiences that today's modern technology users expect, this is more important than ever. And my first question is to Karim. Welcome to our panel today.
Thank you, Jim.
So I've gone over some of the things we've seen in our research here, and I'm kind of curious, as the CEO of Zafin, dealing with your customers, especially in these areas of customer experience and personalization and relationship management, what are some of the key trends that you've seen driving these businesses today?
First of all, Jim, it's a pleasure to be speaking with you and Likhit on this session. And you're correct. This pandemic has really caused the banks to rethink their strategy, and they've really doubled down on digitization and move to the cloud. We as a company have seen 5 key trends that were existing even prior to the pandemic, right? And these 5 key trends have been, first of all, banks are rapidly moving away from focusing on product and centering more on clients and making banking part of the client's daily life rather than an afterthought, right? So that's one. The second thing, as you correctly said, the banks are leveraging data and analytics to deliver highly personalized products and offers. They're priced based on the depth of the relationship. And they're delivering these services through the channels that are desirable to these clients. The third trend that we are seeing is that the banks are pivoting from offering product to offering client journeys that are critical to their client base. So, for example, including financial and non-financial products and services. As an example, talk about buying a car or buying a home, and the banks are trying to help their clients from the start on investigating what car they should buy up to getting the car and insuring the car, right? So they're completing the end-to-end journey. The other thing that we have seen, the other trend we have seen is the banks are delivering the required services and support through the client's desired channel and very much in an integrated approach, right? So previously, you could be dealing with a bank and you would deal with a bank through different channels for different products. And now the banks are trying to ensure that they are reaching out to you from making an offer, selling to you, and servicing to you through the same integrated approach and through the same channel. But lastly, and most important, banks are trying to earn back the trust. And that's really part of the client experience. And they're ensuring that there are fair outcomes. And they are providing a higher level of transparency on pricing and products that the clients consume. These are the key trends that we're seeing, Jim.
So I'd like to send my next question to our other panelist, Likhit Wagle from IBM. So kind of a similar question, but from your perspective, IBM being a partner with all these banks and financial institutions, and you've worked on a lot of big transformation projects with these financial services organizations. So from your standpoint, what were some of the key trends and challenges and even opportunities that you're seeing from your customers?
Jim, hi. It's really good to be on this panel, so thanks for having me on. And Karim, as always, it's great to share a discussion with you. So I'm really looking forward to the rest of this panel event. I think, Jim, Karim captured the trends exceptionally well, right? I mean, I would add maybe a couple of things to what he said. One of the things which I think really does relate to pretty much all of the trends that Karim outlined there is this requirement for the banks to deliver as it were, a next generation, if I could put it that way, a customer experience, right? Because what's actually happening is that more and more of the customers of the bank are now getting used to the experience that they get primarily from the big tech companies, right? So it's the sort of experience that they're getting from Google. It's the sort of experience that they're getting from Facebook and Amazon. And what they're actually looking for, all of their providers of products and services, is an experience that is at that level of quality. And I think inherent within that experience are kind of two things which are really, or maybe three things that are really important, right? The first piece, and this is why I think the banks are facing a major challenge. The first piece is that a customer is looking for instant gratification. So in addition to the point that Karim made, right, which is they're looking for that overall needs to be satisfied. When they're buying a house, they're looking for everything that goes with buying a house, not just the mortgage or the life insurance, right? It's where should I live? How much should I pay for my house? What legal services do I need? They need all of that in order to effect the purchasing of the house. But in addition to that, what is now quite important to them and what they're getting used to is when I apply for that home loan, I want the approval and the money to be in my account within a matter of minutes, ideally seconds, and certainly not weeks and months, which is what happens today, right? And I think the reason the banks struggle is delivering that instant gratification in that way. It's not just a question of approving the loan transaction. It's actually having a modernized set of applications that's sitting on a modern infrastructure that enables the bank to instantaneously respond to that sort of request, right? Which is what they're not able to do today. And particularly in a number of the banks that have built their systems and processes and applications over many, many years, where it's almost like a spaghetti, getting to that kind of modern infrastructure and architecture is not straightforward, right? So that would be the first piece. I think the second point I would make is that, banks are going to be very cost challenged. Again, as you go forward, I don't think a lot of customers are going to be prepared to pay the sorts of costs that banks charge, and particularly costs that they levy in order to be able to earn fee income that's not associated with value-added services, right? So once again, I think the issue is, in terms of that kind of cost to serve, our estimation is that at a minimum, it's going to have to go down by about 25 to 40%, pretty much for every bank in the world, right? And that is a huge challenge in terms of what the banks need to do. And then the last point I would make, which builds upon Karim's point around trust, right? I mean, I think there's an element around trust which is very much around transparency. And I think that's going to become more and more important as more and more decisions are getting done through algorithms that are AI-based or machine learning-based. Customers are going to want to know how a decision was taken, particularly if somebody's been refused a loan or what have you. They're going to want to know, well, why was I refused that particular loan, right? And they're going to require transparency in that. But I think the other side of that coin is also security. What I think the customer is going to want to be really confident about is that the bank's architecture is secure to the core, and that their relationships with the bank are therefore completely secure, right? This is not only in terms of the bank's ability to look after their money or whatever, but also much more importantly, I think, the bank's ability to protect their data, right? So I think those would be some of the things that I would add, Jim.
Yeah, that was great. Like, and one thing we've seen, and I talked about that earlier in my data, is this move towards, these kind of end-to-end comprehensive solutions for things like product and pricing control, fee and rate integrity, and conduct risk assurance. So my next question is for Karim, as the CEO of a company, Zafin, that provides that kind of solution. I'm kind of curious, when you look at this current environment and how critical it is for financial institutions to know which client has which products and services, to understand and assure that you have the right pricing and that it's fair, and that you can understand and substantiate all of this stuff, with your contracts. I'm kind of curious, why do you see this rising importance of these kind of capabilities, this product and pricing and offer management, or for banks and financial institutions as they modernize? I'm going to make that a two-part question too. So first, why do you think this is rising in importance, and also why is it happening right now? So Karim, that's your question.
Thanks, Jim. So there are really four key reasons why banks embark on core modernization, and I'm sure Likhit will add a few more points to mine. The first one is a poor digital experience, right? That's one of the top reasons why banks embark on modernization. If you look at poor digital experience, a product and pricing system enables the banks to deliver precisely the product that the client is looking for through the right channel and at the price that will be reflective of the relationship that the client has with the bank, right? So that's number one. The second would be their ability to launch a new product. Industry standard, launching a new product for the bank takes between 9 to 24 months. Platform like ours, which becomes really a central truth for all the product and pricing, you can deliver new products, new offers within weeks rather than months, and costing you much less than what it costs you today, which is millions of dollars, right? So that's the second point. The third point is, as you correctly said, Jim and Likhit, you re-emphasized, the ability for banks to compete with big techs and fintechs, right? So if you look at the Amazon experience today, Amazon can curate to your needs, so they can provide you a package of goods and services that you're looking for, but at the same time, they can offer you an a la carte menu that you can consume from. That capability doesn't exist. With the product and pricing system, the banks are able to package, personalize, and curate those offers to their clients, right? And the last one is, improved management of risk and compliance with the product and pricing system, which is an enterprise platform. You can not only code suitability, eligibility, but also, to Likhit's point, you can code fairness as to making sure that each and every client gets the right price based on their banking rather than any other aspects or parameters. So we do play a key role in all of these aspects of core modernization. So to your question, Jim, why now? It's a really good question, and my question to the clients is why not? If you look at progressive modernization, it really demands and delivers on simplification, digitization, cost reduction, and it's a way to risk mitigate the impact on business, cost overruns, and time to market, right? So this is really the right time for banks to run the bank cost and increase on grow the bank spend centered around the clients and the growth. And product and pricing plays a key role in the progressive or in any kind of core modernization project.
I'd like to kind of pick up on a couple of the points that Karim made and reinforce them, right? Particularly the point around, why now and kind of why not, right? And I think the key issue here, I mean, what we're certainly seeing with a number of our clients, right, is that they are looking at where they're going to spend their money in terms of horizons. And Horizon 1 is very much around everything that's associated with the direct impact of COVID and dealing with that, which to a large extent has been, how do they deal with remote working, right? And that's, that was something that that most banks felt that they'd done a pretty good job of. I think the issue is that unfortunately most countries around the world are getting into, what's essentially the second or the third wave of this, and therefore the banks are having to rethink how they deal with the impact of COVID, right? But that's kind of Horizon 1. I think Horizon 2 is the really important one, right? Which is, I think a number of the banks are recognizing that, for the next 12 to 18 months, they're going to be in a horrendously difficult economic climate where interest rates are going to be very, very low. And as everybody knows, right, when interest rates are very, very low, net interest margins are not sufficient to drive the level of income that a bank is actually looking for. And therefore, a bank then needs to start to look at a whole variety of other things, particularly things that are going to earn them fees, that are going to supplement the fall off that they're seeing from the net interest on their traditional lending business, right? And this is why, Karim and ourselves are seeing a substantial amount of activity where clients are prepared to spend money now because they know that they need to have, pricing solutions, billing solutions that are simple, that are quick to implement, that they can use in terms of what they're going to be doing in the kind of immediate future, and where the return in terms of time to value is much, much less than the kind of 2 to 3 years that you see on other technology programs, right? So this is one of the reasons why I think you're seeing this coming forward.
I mean, that was really good. Why not? Why now? And why not? I love that. It's interesting. You brought up that you're kind of in a way competing with the big, tech companies and the fintechs to the point where some of them are, not just creating their own payment and financial systems, or creating their own monetary systems. So, that can be a huge challenge for financial institutions, and it really requires a lot of agility and flexibility. So, taking that theme, of building that kind of capability. First, I'm going to send this right back to you, Karim. I mentioned some of the benefits we've seen in our research, reduced cost, higher customer retention. I'm kind of curious, working with your customers, what are some of the benefits you've seen them gain through enabling things like real-time information flow versus batch information, between core systems and their external product and pricing applications? So what are some of the benefits you've seen there?
So on the real-time data, there are multiple fronts where the banks benefit. I'll start with the client experience side, right? With real data streams, the clients can deliver segment of one experience with highly personalized offers and pricing, right? And if that data is extended, that real-time data stream is extended to the ecosystem partners, as to Likhit's point, you can deliver a very personalized client journey, such as buying a car or buying a home, right? From the bank's perspective, the bank has a real-time view on how their business is performing, whether that's to see how the channels are performing or how the products are being consumed across different segments, across different channels, across different geographies, right? At the same time, with real-time data stream, the processed data can be made very quickly available to call center agents, to AI, ML platforms, and for clients' consumption. So clients exactly know where they stand, right? Likhit talked about instant gratification. You can only achieve that with a real data stream. When you talk about batch data, you're really acting on stale data, right? You're acting on the data that you received yesterday rather than what's happening on a real-time basis.
Based on some of the stuff we've just heard from Karim and some of the things we've talked about, my question for Likhit, looking at these capabilities like, real-time data flow and batch information and these externalized product and pricing applications, I'm curious, from an IBM standpoint, as somebody who's worked with a lot of customers, can you share some of the use cases that these financial institutions are leveraging these capabilities for?
I think the nirvana within the banking industry has been, around, genuinely having a 360-degree view of the customer. And that 360-degree view of the customer has now become even more complicated because the open banking regulations around the world mean that you need to understand what that customer is doing with you as a bank, but you also need to be able to understand what that particular customer is doing with a whole variety of other financial services organizations, right? So where a customer gives you a permission, and a lot of customers are prepared to give you to give you permission to have a look at their overall financial position. If you're looking at that customer, you need to be able to look at, for instance, what the assets of that customer are, not just in your bank, but across a whole variety of banks when you take into account what it is that you're going to offer that person, and particularly, what is the risk that you're associated with that customer, and therefore how are you going to price it, right? So that's what I mean by 360-degree view. It's being able to understand, the financial interactions and relationships that particular customer has with a whole variety of institutions, right? And therefore, when you look at the data, what the data needs to be able to do is to continuously provide that 360-degree view. And this is why one of the things for us at IBM, which has been very exciting, is, we're creating what we're calling a customer engagement layer, right, with a number of market-leading participants, of which Zafin is one very important partner, right? But it also includes other partners like Salesforce and Backbase and our own kind of offerings around CLM and KYC through Finergo, because what that's then going to do is it's going to provide an end-to-end solution. That doesn't mean that the client needs to buy it and implement it as one great stonking program. They could implement it as components, driving off those components that are most urgently necessary for them, but within the context of an overall architecture that will not only give them that 360-degree view on a continuous basis, but it will also enable them to deliver some of the experience I was talking about earlier on, right? Now, the one other point I will also make, Jim, within the context of data, right, is there's a very big change happening in terms of how banks assess risk. So whereas in the past, most banks used to assess risk, particularly when you're looking as individuals and you're looking at small and medium enterprise, through, what was the security that particular individual was able to provide, and then they would lend against that security. If you look at the way in which lending is being done today, and this is coming very much from the Chinese marketplace, it's all about what is that customer's ability to repay. Right? So you need to be able to use the transaction information that you're gaining, which has to be real time, and you've got to be able to draw insights from that transaction information to get a real understanding of what that individual, whether that's a person in their kind of individual capacity or whether it's an owner of a small business, what are that person's cash flows, right? What do the inflows and the outflows look like? And then on the back of that, be able to price the product that they're prepared to provide and improve that particular lending decision, right? And this is what the Chinese banks, because they've got trading activity happening on their, Alibaba has trading activity going on their particular internet site, they are pulling out all of that data to be able to make that sort of decision, right? And then the final point I would make on this, Jim, is that this is why, infrastructure becomes so very important. Right? If you look at something like the Z platform that we bring to the party, it's possible to do all of this analytics in real time on the platform and provide the insights that are necessary that you can then take advantage of through the sorts of solutions that Karim is bringing to the party. Right? I think if you are in an environment which is batch, or you're in an environment where you're going to have to pull that data off your platform, take it somewhere else, and do the work that's necessary in order to draw the insights and then put it back onto the platform. Firstly, there's going to be substantial latency because you're going through that whole rigmarole of taking the data off, analyzing and putting it back. And guess how much security threats there are, right? Because you're transporting data somewhere else and bringing it back, right? This is why I think, this has to be exactly as Karim was describing, an end-to-end story where you're talking about that that kind of engagement channel, which is the front end, but that front end needs to be supported by a modern infrastructure if we're really going to deliver this benefit to our clients, right?
It's interesting to me, a lot of what we're talking about, this sort of like open banking, these modernized experience, being able to leverage a lot of these capabilities, building this sort of end-to-end environment. That requires a lot of core integration, a lot of integration, between these cloud-based systems, between your core banking systems, between things like that. So I'm kind of curious, Karim, how are financial institutions enacting and achieving this kind of integration that's really necessary to this kind of transformation?
So, Jim, that's a really good question, and I think I'll pick up where Likhit left off. The Z-Series platform is highly secure and scalable platform, right? And the top banks, if you look at the top 100 banks today, rely on Z platform to deliver the daily banking services to their clients, right? So if you start from there, from the Z-Series platform, and you look at the hybrid cloud strategy that IBM has introduced with the FS-ready cloud, that's really a starting point for clients to look at, right? The second thing is working with IBM. IBM has introduced the Digital Integration Hub, which makes data available almost on a real-time basis to applications like ours, right? And which is really important for us to be able to deliver those personalized offers and pricing to the clients. The other aspect is, like I said, you really need to look at modern technology stack, right? So SaaS applications that are microservices based and that can leverage real-time data streams to tap onto, process, and react to at the same time, right? And all of this can be enabled right on the Z series, so the data doesn't really have to leave the platform on which it resides, right? So I think that's the integration that can be achieved. We are also working with buying and buying partners like IBM, Salesforce, which Likhit mentioned, DXC, and some of the tier one banks across the globe to showcase, the art of possible in client experience and innovations, starting from the Z series platform.
I think, Jim, the other point that I would kind of just add to, because Karim made a couple of points there, which I think are worthy of being reiterated, right? I think the first point is that there is a sea change happening, particularly in the larger banks, who have traditionally always looked at building their own solutions, right? And they're moving from an environment which was built to now an environment which is very much buy. And therefore, they are looking for solutions like the Zafin solution that are mature, that are proven, and are through networks like Bayan are setting the industry standard, right? I think the second point that I would also like to reiterate is that I think as we look out over a period of time, you are going to see not only banking clients buying in these capabilities, but they're also going to be wanting to buy these capabilities on an as-a-service basis, as opposed to something which they own. And the issue with as a service for banking is, and this is again why Zafin and IBM are working so closely together. One of the issues with buying in as a service is that if you're sitting on a public cloud, the process that is required in order to certify that particular cloud capability for a particular client is extremely long, extremely expensive, and very onerous. And the problem is, if you certify it, say, for one bank in the US, that doesn't necessarily mean that particular thing is also certified for other banks in the US. You've got to go through that entire process again. So not only is it very long and expensive, you've got to kind of duplicate it many times, right? And that, I think, is a key advantage of the IBM Cloud for Financial Services, which we launched together with Bank of America, and on which Karim's business is going to be a key partner, right? Because what that particular cloud does is that once Zafin is certified, and they're pretty advanced in doing this, once Zafin is certified on that particular cloud platform in the US, pretty much every single bank in the US would be able to use that without having to go through that certification process again. What is more, there is a continuous compliance. So if there are any changes, say in regulations, that are automatically fed in, you don't have to again go through the certification process, right? When an auditor turns up at the bank and says, show me that you're compliant in terms of, stuff that you're buying in on an as-is basis, we can show that to them immediately because of the way this is set up, as having to go away and do 6 to 8 weeks of work to provide all the evidence that would satisfy the auditor, right? This can be done instantaneously. And this is not only going to be the US, right? We're working with anchor clients in other parts of the world in order to take the work that's been done in the US, which I think, covers probably about 75 to 80% of what's required in some of the other bigger jurisdictions like, the UK and Germany and places like Australia. But we're working with anchor clients in those jurisdictions to be able to complete the story. So again, for Karim, so long as it's certified on the IBM Cloud for FSS, we could jointly go and provide this on an as a service basis to clients, which again, means you can implement very fast, right? Going back to the point I was making earlier on, you're really bringing time to value down to a much, much smaller period of time as compared to where it was before, right?
So I want to wrap up today's panel, and this is a question I used to kind of phrase as if you were sharing an elevator or a ride share with a banking executive, but we're not doing those anymore. So if you're sharing a video call with a banking executive, what would be your kind of, if they asked you how they could transform and modernize their their banking systems, their product and pricing offering, and just really transform. What would be some of the strategies and recommendations you would offer them to get on this path to transformation and modernization? I'm going to direct this first to you, Karim, and then Likhit, you can provide your answer.
Thanks, Jim. So there are 5 steps, and of course, Likhit and the team at IBM, the GBS team, has much more experience than we do as a company, because they are engaged in these transformation projects across the globe and look at end-to-end transformations, right? So I would say that first is adopt a progressive core modernization. Let your core system sit on the IBM Z series platform. It has been working. It works in a secure manner, is highly scalable, and delivers all the functionality that you need from what a core system needs to do in account processing. The second thing I would say is adopt a buy-in standards model that gives you a clear path on how you can lay out an architecture and potential adaptability of vendor platforms that comply to such standards. The third point I would say is simplify the core system, leveraging the IBM Digital Integration Hub to externalize the product and pricing information into a platform like ours, right? Fourth, as Likhit mentioned, the banks really need to look at adopting event streaming platforms and technology stacks that can deliver and act on real-time data streams. And lastly, the banks shouldn't be thinking about a big bang approach, but really should think about starting with client journeys that can deliver the highest business impact.
And Likhit, your recommendation?
Jim, I would start off from where Karim finished, right? Which is my very strong recommendation would be start with the customer journeys. Prioritize those customer journeys that are most important from your kind of strategic perspective and also from your kind of benefit perspective. And then for each one of those customer journeys, you really need to transform the stack from what people call front to back, right? So it's a customer engagement layer, the applications that are supporting that customer engagement layer, and then it's the it's the back office systems and the infrastructure that kind of back office system is kind of sitting on, right? And I think the point that I want to make is that may sound daunting, but there is a significant amount of real experience out there that shows that this can be done in reasonable periods of time. New techniques like garages and design thinking are really helping to accelerate the kind of time to value and to manage the risk. And then I think the last 2 points that I would make, right, is increasingly I would recommend to banks that as they're thinking about this particular approach, their architecture should, and I would strongly recommend must, include providers like Zafin that are market-leading providers. They should not be looking to build those particular components. They should bring them in because that will help to accelerate the transformation. And I'd also make the point that Karim made is a really good one. You cannot exclude the modernization of the core banking systems to externalize services. That is critical. You also cannot exclude the infrastructure, because if you do all of this and it's still sitting on a traditional infrastructure, you're going to lose a lot of the benefit. Now, again, the good news is if you look at what's happening in terms of hybrid cloud, and particularly if you look at using the Z series as part of that hybrid cloud platform, it is absolutely possible to provide the infrastructure that's required to deliver these benefits, right? The size of the prize is huge, Jim.
Yeah. Yes, again, that kind of huge benefit is key for financial institutions today. And I think we've all learned quite a bit about some of the key strategies and benefits that financial institutions are gaining through modernization and by deploying intelligent and flexible product and pricing management. I want to thank Karim Somji of Zafin and Likhit Wagle of IBM. There was a lot of great information there today, so thank you both.
Thank you. Thanks very much, Jim. Thanks for having us.
Thank you, Jim. Thank you, Likhit.
Great. And I hope everyone has learned some key information to help their own financial institution on their journey towards progressive modernization. Thanks for joining us.